Welcome back to Dinar Current, where currency conversations meet historic possibility. In the ever-evolving world of international finance, few currencies have drawn as much curiosity, excitement, and debate as Iraq's dinar IQD and Vietnam's dong VND. For years, holders of these currencies have been asking the same question: when will things finally shift in a big way? Now, as we progress through May 2025, that question might finally be getting an answer. This isn't just another page on the calendar, it could be a turning point for the global currency landscape. Conversations that were once speculative are now taking on a more serious tone, especially in emerging markets like Iraq and Vietnam. We're witnessing a revival of national pride, economic control, and a surge of interest from global investors. Recent policy changes, financial institution reforms, and foreign investment trends point towards something much bigger than a temporary market shift. It could mark the beginning of a long-anticipated financial rebalancing. Whether you hold IQD, VND, or are simply watching from the sidelines, now is the time to stay alert. Monetary reforms, strategic investments, and national economic planning are forming the foundation for what may be historic revaluations. One of the most noteworthy recent announcements came directly from Iraq's leadership. The Prime Minister publicly affirmed that Iraq is now fully autonomous in managing its energy industry, no longer under outside influence. This isn't just a policy decision, it symbolizes a deeper move toward full political and financial independence. For decades, Iraq's policies were shaped or constrained by international forces. After years of post-conflict recovery, sanctions, and domestic challenges, Iraq is now asserting control over its financial destiny. A major aspect of this independence involves the country's foreign reserves, which remain fully under Iraqi control, an important assurance for both citizens and foreign observers. Iraq's energy sector stands at a crossroads. Currently, the country burns over 130 million cubic meters of natural gas daily just to meet domestic demand, and still imports an additional 10,000 cubic meters. These imports cost Iraq nearly $4 billion annually. At the same time, the nation flares huge volumes of natural gas, causing environmental harm and costing up to $5 billion in lost revenue each year. Combined, that's nearly $9 billion in yearly losses. Iraq's leadership is tackling this head-on. The government is launching reforms to improve energy efficiency, particularly focusing on capturing and reusing wasted gas. New infrastructure projects and laws aim to convert this waste into usable energy. The financial savings from this effort could then be redirected to public services like healthcare, education, housing, and transportation, improving the lives of citizens and strengthening the dinar's foundation. But internal reform is only part of the story. What makes this moment truly significant is the growing international interest in Iraq. Over 50 U.S. companies have shown interest in entering the Iraqi market, with many already sending teams and initiating discussions. Countries such as Japan, Germany, France, and the UK are also engaging in talks and forming early partnerships, clear signs of confidence in Iraq's future. This kind of foreign attention doesn't happen without careful consideration. These developments suggest Iraq is being viewed as a credible and promising economic partner. When international businesses take a country seriously, it speaks volumes about its potential, especially regarding its currency. Long-term foreign investment doesn't just bring money. It brings new technology, skills, and infrastructure, factors that contribute to economic stability. Iraq's growing attractiveness to global players is paving the way for what many believe will be a renaissance for the dinar. Currency watchers are especially focused on Iraq's monetary policy. A key question remains: will Iraq stick with its current peg to the US dollar, or move toward a more flexible system, perhaps pegging the dinar to a basket of global currencies? Keeping the dollar peg ensures short-term stability and simplified trade. But moving to a diversified basket, incorporating currencies like the euro, yen, or yuan, could offer greater independence and agility in global markets. Iraq's central bank has signaled active work on monetary reform. Though nothing official has been confirmed, trusted sources suggest major structural changes may be in development. These changes could involve a revaluation, redenomination, or even a complete overhaul of Iraq's currency system. Regardless of the exact path, these would be major milestones, drawing the attention of not just IQD holders, but economists, governments, and financial institutions worldwide. Not long ago, Iraq was dismissed by most mainstream analysts. Years of conflict and corruption made it a risky investment. That narrative is quickly changing. Analysts are now closely reviewing Iraq's reform strategies, financial system upgrades, and economic development plans. Why? Because the signs of change are too powerful to ignore. The Iraqi government has cracked down on black market currency manipulation and is modernizing its banking system with new regulations, digital tools, and anti-corruption mechanisms. These aren't cosmetic upgrades, they're foundational shifts that influence everything from investment flows to public trust. Some experts believe a phased or full revaluation is on the horizon. Others expect a gradual appreciation as reforms take hold. Either way, the trajectory is positive, and Iraq is stepping into the global spotlight. Modern banks are leading the charge. One of Iraq's largest banks recently reported record-breaking profits and boosted its capital reserves beyond 500 trillion dinars. This milestone shows that Iraqi banks are preparing to operate on an international level. Digital banking, mobile access, and cybersecurity are being rapidly expanded. At the same time, central financial authorities are enforcing stronger regulations, enhancing transparency, and enforcing anti-money laundering policies. These actions attract investors and build trust among citizens, encouraging both savings and domestic lending. As the banking system continues to evolve, the likelihood of the dinar reflecting its true market value rises significantly. In the world of finance, trust is everything, and Iraq's banking modernization is delivering just that. Meanwhile, Vietnam's economic story is equally impressive. The VND is gaining ground thanks to the country's deepening ties to the global economy. Vietnam has rapidly shifted from an agricultural economy to a manufacturing powerhouse, integrated into major global supply chains. The country now plays a key role in producing electronics, textiles, and technology, bolstered by trade deals with Asia, Europe, and North America. Vietnam's economic policies emphasize balanced growth, low inflation, and fiscal discipline. Its banking system is embracing digital transformation and adopting advanced financial technologies. These changes are improving Vietnam's global financial reputation. Many believe the dong is approaching a revaluation moment. Analysts see Vietnam as one of the most promising emerging markets, making the VND a currency to watch. In both public and private financial circles, speculation is building. Whispers of early exchange opportunities, before official revaluations, are growing louder. These pre-RV exchange options, or early liquidity windows, could emerge soon. Some insiders suggest they may have already begun forming quietly as early as April. If true, this would mean preparation is more important than ever. Those who are organized, informed, and ready could be the first to benefit when the window opens. These opportunities tend to appear and disappear quickly, so it's vital to stay informed and connected to reliable sources. One standout symbol of Iraq's progress is Rapidan Bank. This institution is leading the digital charge, modernizing banking through AI, cross-border payment systems, biometric security, and real-time transaction monitoring. These upgrades bring Iraq's banking in line with standards seen in global hubs like London and Singapore. Why does this matter to currency holders? Because investor trust is rooted in strong, transparent financial systems. Rapidan's progress shows Iraq is ready to take its place in international finance. And as financial infrastructure strengthens, so does the potential for the dinar to rise in value. What we're seeing in Iraq and Vietnam is nothing short of a financial transformation. These aren't minor tweaks, they are deep structural changes guided by long-term national strategies. Iraq is rising from decades of instability with newfound independence and growing international interest. Vietnam is climbing the global rankings through savvy regulation and impressive economic performance. For holders of IQD and VND, the current developments could represent a once-in-a-generation opportunity. Whether through revaluation, market adjustments, or early exchanges, a shift may be closer than ever. Now is the time to stay alert, stay informed, and prepare. When the opportunity comes, those who are ready will be best positioned to benefit. This isn't the end, it's the beginning of a new era in global finance. That's all for this edition of Dinar Current. We're here to keep you updated with accurate, timely insights on the IQD, VND, and broader financial trends that could impact your future. If you found this update useful, be sure to like the video, subscribe, and tap the notification bell so you never miss out. Let us know your thoughts in the comments. Do you think revaluation is near? Are you seeing the same patterns? Let's keep the conversation going and support each other on this financial journey. Remember, knowledge is power, and preparation makes all the difference. This is Shears signing off from Dinar Current. Stay focused, stay ready, and stay hopeful.